Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us. All right, I've got David Williams on the show with us. All right, David, how have you been?
I'm good, Michael. Thanks for having me on.
All right, my pleasure. What are we doing today?
Well, just a couple things. You know, our larger forecast was for the S&P to move up to 2718. This is the S&P 500, the mid-cap index. A lot of people follow that. A lot of people trade it. And indeed, yesterday they got up to 2718.50. That was the top. We've had a number of forecasts, and we have a continuing forecast for a decline from where we are. We've already had a pretty good down day, but we do expect some further decline into next week, into Wednesday, plus or minus a day of next week, where we very well may see much lower prices than what we've seen today, down perhaps at the 26.55 level. That forecast, Michael, isn't fully confirmed yet, but I will, on your program, we'll give it out when we're, fully ready to give it out as a fully confirmed forecast that we're going to be trading.
Do you think that we're going to get some volatility on this next leg down?
Well, I tend to think that, yes, we do. And under this administration, every move is volatile. As you know, we have, under this current administration, the volatility has been beyond excellent in the markets. And that's because there's a lot of give and take in the geopolitical picture. Trump is a very controversial figure for many people. But on the other hand, he's a very aggressive person when it comes to negotiating. And so a lot of this spools up a lot of reactions from the market, whether or not he's going to, bomb Syria, whether or not how he's going to deal with his talk with Kim Jong. All of this leads to continued volatility and excellent trades available in markets. And this includes gold, crude oil, and the stock markets.
But I guess the underlying question is, look, we got a low at 25.52 that occurred back on April 2nd. That's the most recent big low. Do you think that we're going to, because you had already said once before, hey, I think that the top is in the 28.78 top that we had. We've seen that. We probably won't see it for a little while. Do you think we're going to break the 25.52 lows? My bottom.
We don't have a forecast right now for them to break it, but if we do, I'll let you know. Number one, number two, our forecast is that the market is in a correction into 2020.
Right.
Meaning that we're not going to see sustained all-time new highs in the market until that period of time, which is 2020. And it could be as early as 2019 if the market's really bullish and they get it done quickly. But we do think, as you suggested there, that we are in a corrective phase, no new sustainable highs until another year or two passes.
Okay. You did great on that crude oil. 69.55 was a recent high.
Yeah, we were calling for back 2 months ago when crude was down at $60 and $61, and I believe on your program as well.
Yep.
But we were calling for crude to advance to $68 to $69, and to do so, the first time they would do it would be in April, which is this month now, when we've been up to $69.50 and change. We're also looking for higher prices, like $73 in crude later in the year, but not too later, more like June or July of this year or before. So crude oil is on a tear, and any pullbacks we think are buying territory for further highs. One other point I'd like to make, Michael, is that the movement in crude from $61 when we first came out with the forecast, the movement from there to where they just reached, which is about an $8 move, is worth $8,000 for every contract that somebody owns of crude. Not that somebody would have held it through the whole move, perhaps, but just showing how much is really possible in these markets.
I got it. What about the bond market? Because you were pretty good on that one.
Well, the bond market did have a pretty sizable sell-off today. Bonds, as you know, really affect the interest rates that we all pay for houses, for cars, for to some degree, credit card. And the bond market dropping puts pressure on interest rates to rise. We've already heard through the government itself, through the new Fed chairman, that we're going to be seeing some interest rate rises. I've been saying for years that the economy will improve when interest rates start to go back up, because that greases the wheel for commerce. We don't want to have super high interest rates, and ultimately, we will. The interest rates are ultimately going to be, in another 25 or 30 years, a long time from now, they're going to be very, very high again. But for the time being, we want the overall economy to improve, and by getting somewhat higher interest rates, which are coming this year, that is going to help improve this economy. With regard to the bond market itself, we're quite bearish. We think bonds move lower into the month of May. So that means interest rate pressure is to the upside, that interest rates will want to go higher into May.
I get that. I mean, I'm looking at you. You absolutely nailed it for that 142 low that you had been calling on our show. So, okay, we'll take it from there. We got about a minute left. Anything on Bitcoin?
Sure. Nothing new on Bitcoin, but I do want to say, thank you for asking too. I do want to say that overall, the stock market is still in very good shape, but we are in a corrective phase, and it's going to be a little bit of time before we see the general indices, actually making any really sustained all-time new highs. There are plenty of money-making opportunities in a corrective market. But, our past performance is no indication of our future performance. We're going to do everything we can to make our future performance excellent. But having a great forecast for where markets are going to go, and even when they're going to get there, can be a dramatic improvement over just guessing or following tips.
We got to go, Dave, but
you got it.
I hate to cut you off, but I'll see you tomorrow.
Thank you very much, Michael, for having me on the extended segment.
You're welcome. All right, David Williams, Pagetrader.com. If you want to know what's going to happen tomorrow, you got to call him today. Well, the CEO Money with Michael Yorba. We'll talk to you again tomorrow. Thanks.